What's going on, guys? Wanted to hop on today and talk about the two shorts that I took on NQ this morning. They were both winners. One was a scalp, and then one was a pretty large winner for about 177 points. Um, Two really good setups in that A plus range for confirmations wise. So I just wanted to hop on this morning and, like I always do, walk through the morning plan, the trade execution, trade confirmations, trade management, um, everything that I was looking at inside of the trade. So without further ado, let's get into it. So to start, um, obviously the market has been on a massive downtrend. Um, every single rally has been sold. Every single rally has been extremely short-lived because they're just to get pops into buy-side liquidity or areas of liquidity for larger participants to reload to go lower. And that's exactly what we had yesterday. Yesterday we had a drop lower after we popped into buy side liquidity. We had a drop lower after we popped into buy side liquidity, and then the large relief rally up yesterday. But despite that large relief rally yesterday, we still closed and created this daily fair value gap to the downside. So coming into this morning, I wanted to see uh, a pop into this daily fair value gap, and then the price signature that I look for to take price lower to the downside to first the London sell side liquidity and then yesterday's low of day. Um, I figured that London sell side liquidity was more so of a better target just from range wise, that I knew that this was a safe play. Just because it was in this previous session and yesterday, we would have to go up a pretty substantial way to get to yesterday's low of day. So one thing that I noticed this morning coming in was the AMD that was setting up before CPI data. We had this accumulation right here, and then the manipulation up into the daily fair value gap, and then the distribution lower. The thing that I like to do with my trades is I like to enter in the distribution phase. So I want to avoid the accumulation and manipulation phase because I know they're both not the real move, and then enter into the distribution phase because that is the move that I believe that will have the best momentum, and also it's going to be going towards the clear draw on liquidity for the day. Um, so we have this accumulation right here before CPI data this morning at 8:30. Then at 8:30, CPI was the manipulation up. So now that we have our accumulation and manipulation, I'm now looking for a distribution. And then also to add on top of that, we did sweep London buy side liquidity this morning. So now I'm looking for the New York AM reversal of this entire overnight move that we had to go first to London sell side liquidity, and then if we just so happen to get down to yesterday's sell side liquidity, that's even better. But like I said, I'm just taking the for short plays, and that's what was presented this morning. So now that we had the sweep of buy side liquidity, we had the tap of the daily fair value gap. I'm now looking for on a higher time frame, like a 5 minute or a 15 minute, for price to start showing signatures that it's ready to roll over. So before market open, we're still waiting. All right, we have another sweep of buy side right here. Okay, and then also we had an SMT at these intermediate term highs where NQ was able to reach and sweep above this intermediate term high, and ES was not. So now that I have my pop into buy side liquidity, my pop into the daily fair value gap, my what is this? Yeah, right here. Now I'm now looking for a change in the state of delivery to the downside, and that change in the state of delivery to the downside would be these clusters of up close candles right here on the 5 minute. So I'm waiting for a closure below here, and then I'm waiting for that expansion price leg to stop, and then get on the second phase of the delivery to the downside to go and target first the sell side liquidity of the London session. So now this is just after market open. We have our drop down, but still no close below. And then we have our close below right here. So now all I'm doing at this point is waiting for price to retrace to equilibrium of this change in the state of delivery downsides price leg, this price range. So I'm not touching or entering a trade until we come and tap into this 50% area. This 50% area is important because this is where larger participants usually like to reload. I like to think of it from a painting analogy. When you first put paint on the wall, you're going to take an initial brush stroke, and then you're going to go back and get the rest of the paint to go and then continue the rest of the wall. It's the same thing with larger participants filling their orders. All of their orders do not get filled all at once, so they come back and they reload and they get their orders. And that typically happens around the 50% mark. This is called the optimal trade entry. So I'm waiting for price to re-enter. We have a tap of the 50% range back into this 1 minute fair value gap. There was also another SMT right here where NQ was not able to sweep these intermediate term highs and ES was. And then I'm just looking for the same exact thing on the 1 minute that I was looking for on the 5 minute. I'm looking for a change in the state of delivery to the downside. Since we already tapped equilibrium of this 5 minute price range, I just entered on the closure below this change in the state of delivery, and I was only targeting these data lows right here. The reason I only targeted the data lows right here and made this a quick scalp was because this is a daily fair value gap, and with larger time frame fair value gaps and PD arrays, you're more than likely going to need a larger time frame shift in structure. So a better shift in structure would have been the 15-minute to the downside and then a retracement into the optimal trade entry range or the equilibrium range of the 15-minute price leg. So I just wanted to take this to data lows, and we got our closure below here. I entered here with my stop above just this candle right here, and then took it down to the data lows, which we got right here. Okay, we got our data lows right there. So now I'm all out. And then I was waiting, journaling, and then I saw another setup that looked really, really good that could possibly fuel this move to go lower to sell side liquidity. And that is when price retraced to the equilibrium of this 15-minute price leg after changing the state of delivery to the downside on the 15-minute. So we have our change in the state of delivery right here on the 15-minute, which is this last candle right here. Pretty much all this is a retracement back to this 5-minute range. This cluster of up close candles just looks like one candle on the 15-minute. So that's pretty much all that is. So now that I have the retracement, you see we retrace back to 15 or 50% of this range. I'm just going to look for the same 1 minute internal model that we had on the 1 minute before, but now just based off the 15-minute. So now we can see right here, after we have the retracement to the 50% of this leg, we have another change in the state of delivery to the downside on the 1 minute. I took the market short after the closure of this candle. You can take it short either after the closure of this candle, or you can wait for a retracement back into 50% of this range, just because this range is pretty large. So we ended up coming back into 50% of this range right here. I'll show you that. Okay. And then entry right here, stop above the fair value gap. And then I took one off at the regular trading hours low of day, which is right here. And then the thing that I did after that was, let's just go to the 5-minute and speed this up a little bit. I took one off at the low of day right there, and then we got back to the buy side liquidity right here, and then I took the rest of my trade off around this area because ES was already at the London sell side liquidity, so I didn't want to get caught in the SMT and then price reverses all the way. So I ended up just taking this off for a 177 point winner. Two very, very great setups this morning that I just had to act on. They're kind of just like in your face. This has been the theme for the past couple of trading sessions where there's been pops in the buy side liquidity and then there's a retracement. The other thing that I do want to talk about is reviewing your data is extremely important, because I was noticing that I was entering too early on a lower time frame when on a higher time frame price was building to retrace to equilibrium to reload to go short. So one thing that I was doing was instead of waiting for price to retrace to this range of liquidity, this previous range, I was just slapping the short on a lower time frame because I saw it down here instead of waiting for price to come back up here to reload and go short. But I never would have noticed that without reviewing my data. And ever since I made that change, one simple change for just to wait for price to distribute lower and then come back into the range, two things have happened. My patience has been way better, and also the ranges have been larger for me to milk more profits. So I just think it's important to recognize the trading conditions that you're in at the moment, and then recognize and review your data to see where you could, expand and take advantage of different types of setups. But overall, this was an amazing day. I really hope this video helps you and recognize that you can do a lot of things just by reviewing your data and remaining patient. And like I always say, making a morning plan and following with it. Everything that happened in this morning session right here, I wrote about in my pre-market plan before I even entered a trade. Before the market even opened, I wrote a pre-market plan, and then I waited for that exact plan to happen. So if you guys have any questions, please feel free to reach out to me on Instagram or drop a comment below, and I will talk to you guys next time.